Welcome to our new IFRS Educational Fund series. It is an initiative of OG Inspiration Limited. It is dedicated to providing complementary and supplementary education on International Financial Reporting Standards, IFRS, through a multiple choice question and answer approach. It is intended to make learning or intellectual assurance fun. In this session, we shall be considering 10 questions to which the answers have been provided on IFRS 16. This is the standard on leases. Viewers and subscribers have 30 seconds to select or choose their answer to each question. Please enjoy it. Question number 1. Which of the following terms is not found in IFRS 16? A. Capital lease. B. Economic life. C. Lessee's incremental borrowing rate. D. Interest rate implicit in the lease. E. Initial direct costs. Time counts. Ten seconds gone. Twenty seconds gone. Time up. The answer to question number 1 is A. Capital lease. Even though capital lease may be explained in ways similar or seeming the same with finance lease, capital lease is not a term found in IFRS 16. A is the answer to question number 1. Question number 2. Who recognizes right of use assets in the books? A. Lessor. B. Lessee. C. Sublessor. D. Witnessing party. E. Lessor and lessee. Time counts. Ten seconds gone. Twenty seconds gone. Time up. The answer to question number 2 is B. Lessee. It is the lessee who recognizes a right of use asset. B is the answer to question number 2. Question number 3. Where no lease payment has been made at start, no initial direct costs incurred, and no cost estimates are to be incurred for dismantling, removing, and restoration by lessee, right of use asset is initially dash. A. More than lease liability. B. Less than lease liability. C. Equal to lease liability. D. Either more than or equal to lease liability. E. Either less than or equal to lease liability. Time counts. Ten seconds gone. Twenty seconds gone. Time up. The answer to question number 3 is C. Equal to lease liability. For initial recognition, the cost of right of use assets is the sum of the amount of the initial measurement of the lease liability, any lease payment made at or before the commencement date, any initial direct cost incurred by the lessee, and estimates for dismantling, removing, and restoration related to the lease item. Right of use asset is equal to the amount of lease liability at initial recognition where the other components do not arise. C is the answer to question number 3. Question number 4. Which of the following models is not used in measuring right of use assets? A. Cost model. B. Revaluation model. C, fair value model. D, present value model. E, none of the above. Time counts. 10 seconds gone. 20 seconds gone. 'Time up. The answer to question number 4 is D, present value model. IFRS 16 provides for the use of cost, revaluation, or fair value in measuring right of use assets. D is the answer to question number 4. Question number 5. The lease reporting provisions of IFRS 16 recognize which of the following from the perspective of the lessee? A, finance lease. B, capital lease. C, operating lease. D, finance lease and operating lease. E, none of the contents of the options. Time counts. 10 seconds gone. 20 seconds gone. 'Time up. The answer to question number 5 is E, none of the contents of the options. IFRS 16 does not recognize finance, capital, or operating lease from the perspective of a lessee. It is only with respect to a lessor that finance lease and operating lease are identified and separate treatment provided for. E is the answer to question number 5. Question number 6. One of the following does not affect the subsequent measurement of lease liability. A, initial indirect cost incurred. B, interest on the lease liability. C, lease payments made. D, reassessment of lease liability. E, lease modifications. Time counts. 10 seconds gone. 20 seconds gone. 'Time up. The answer to question number 6 is A, initial direct cost incurred. Initial direct costs incurred are not cost components of lease liability, whether at initial or subsequent measurement. A is the answer to question number 6. Question number 7. Which of the following is correct about reassessment of lease liability and lease modifications? A, both are increase in scope of a lease. B, both are increase in the consideration of a lease. C, both are extension of a lease term by option. D, both are options to terminate a lease. E, reassessment of lease liability does not involve increase in scope of a lease, but lease modification involves increased scope. Time counts. 10 seconds gone. 20 seconds gone. 'Time up. The answer to question number 7 is E. Reassessment of lease liability does not involve increase in scope of a lease, but lease modification involves increased scope. Options A to D are incorrect about reassessment of lease liability and lease modifications. E is the answer to question number 7. Question number 8. Cash payments for the principal portion of lease liability is presented by the lessee in the statement of cash flows as dash. A, operating activities. B, financing activities. C, investing activities. D, adjustment to cash and cash equivalents generated in the period. E, adjustment to cash and cash equivalents at start of the period. Time counts. 10 seconds gone. 20 seconds gone. Time up. The answer to question number 8 is B, financing activities. Lease transactions by lessee is a financing activity. B is the answer to question number 8. Question number 9. A lessee classifies short-term lease payments and payments for leases of low-value assets in the statement of cash flows as dash. A, operating activities. B, financing activities. C, investing activities. D, either operating or financing activities. E, either operating or investing activities. Time counts. 10 seconds gone. 20 seconds gone. Time up. The answer to question number 9 is A, operating activities. Payments on short-term leases and leases of low-value assets are considered as payments on operating activities based on the nature of these leases under IFRS 16. A is the answer to question number 9. Question number 10. Right-of-use assets are depreciated in line with which of the following standards? A, IAS 36, B, IFRS 16, C, IAS 16, D, IAS 2, E, IFRS 9. Time counts. 10 seconds gone. 20 seconds gone. Time up. The answer to question number 10 is C, IAS 16. A lessee applies the depreciation requirements of IAS 16, property, plant, and equipment, in depreciating right-of-use assets. C is the answer to question number 10. That is all for this set. Thank you for joining us for the set 1 of IFRS 16 leases. We invite you to subscribe to our channel, share our links, and invite those in your network to do the same. This will enable you and all of the subscribers get direct notification on future video uploads. We intend to cover all of the standards in this framework and create further sets of questions and answers on standards already covered. For collaboration in this area, please call or WhatsApp +2349 030 770109. Bye for now.